VYM 79% crushed VXUS's 45% over 5 years, but VXUS just rocketed ahead with 35% versus VYM's 17% recently. VXUS crushed VYM with a 35% gain last year. International stocks now have all the momentum on their side. But here's where it gets interesting. VYM's 79% 5-year gain crushed VXUS by nearly double, proof that patient dividend investors built serious wealth here. In plain English, think of total returns like race cars. VYM won the 5-year marathon with steady performance, while VXUS has the faster engine right now with stronger recent momentum. Different time frames reveal different champions. Now let's shift gears and look at VYM's Sharpe ratio of 0.6 doubles, VXUS is 0.3. You're getting twice the return for every unit of risk you take. Here's where the story takes a turn. VXUS's Sharpe ratio of 0.3 means you're taking on volatility without enough returns to justify the bumpy ride ahead. Let's break this down further. VXUS crushed it with a 2.3 Sortino ratio, delivering strong returns while keeping your downside exposure surprisingly low last year. But here's where it gets interesting. VYM's Sortino ratio of just 1.1 reveals weak downside protection. VXUS delivered better loss control while still capturing solid gains. In plain English, think of risk-adjusted returns like a report card. VYM earns consistent A's over 5 years for steady performance, while VXUS just aced the recent test, but has a mixed transcript overall. Let's dig into the details. VYM's 16% drop over 5 years shows remarkable stability. That's downside protection, letting you actually sleep through market chaos. Here's where things get revealing. VXUS took a brutal 29% hit at its worst, nearly double VYM's pain, showing how international markets can amplify downside risk. Now let's put this in perspective. VYM snapped back to break even in just 2 months. That's resilience you want when markets dip and recover fast. But wait, there's more to this story. VXUS took 580 days to recover from its worst drop. That's nearly 2 years just to break even again. In plain English, think of maximum drawdown like a swimming pool. VYM barely got its feet wet in the shallow end, while VXUS plunged deep and took forever to climb back out. Let's take a closer look. VXUS delivers a solid 3.1% dividend yield. That's real income flowing from international stocks into your pocket right now. Now here's where it gets tricky. VYM's 2.4% yield trails VXUS by 70 basis points, but you're trading income for stability. Less cash now, fewer sleepless nights later. But that's not the whole picture. VXUS dividends jumped 11% over 3 years. That's solid income growth you're getting from international markets outside the US. VYM's dividend growth is slow at just 4% over 3 years, but you're getting stability and predictable income instead. In plain English, picture this rocket blastoff analogy. VXUS launches with explosive income today, accelerating fast. VYM, it's the steady burn, consistent trajectory with no surprise stalls along the way. Now let's connect the dots. VYM's 0.9 correlation means it'll rise and fall almost perfectly in sync with the broader US stock market. But hold on a second. VXUS moves with the S&P 500 about 80% of the time, but that 20% independence gives you real diversification benefits. Let's unpack this a bit. Before we reveal the winner, who's your pick, VXUS or VYM? Drop your vote below. In plain English, here's why this matters. VYM moves in lockstep with US markets. giving you no real diversification. VXUS, though, it zigs when America zags. That's the dance partner you actually need. Now let's flip the script. VXUS keeps your costs incredibly low at just 0.05% annually. That's practically nothing eating into your international returns. But there's a catch. VYM's 0.06% expense ratio is barely higher than VXUS. We're talking pennies here. Both funds are incredibly cheap to own. Let's get into the weeds here. VXUS keeps trading minimal at just 4% turnover. That means fewer transaction costs eating into your returns every year. However, VYM's 6% turnover means it's barely trading at all. A true buy and hold fund that keeps transaction costs rock bottom for investors. In plain English, both funds are ridiculously cheap. We're talking less than a quarter per $100 invested. The difference between them? Just a single penny. That's basically couch change. Let's zoom in on this. VXUS spreads your risk across over 8,000 stocks worldwide. That's diversification on a scale most funds can't even dream of matching. VYM's concentrated approach with just 569 stocks means each holding packs more punch. Both upside and downside matter more here. Here's where the story takes a turn. VXUS gives you pure international play. 97% in non-US stocks means you're almost completely outside America's borders here. Let's break this down further. VYM's heavily focused on America, nearly 99% in US stocks. If you're hunting for international diversification, look elsewhere. In plain English, VXUS spreads your risk across thousands of international holdings, like distributing eggs across countless baskets worldwide. VYM concentrates in fewer US stocks, but they're built to last. Now for the real question, VXUS's price to earnings of 14.7 means you're getting more earnings per dollar. International stocks look cheaper than their US counterparts right now. Let's dig into the details. VYM's PE ratio of 16.4 reflects that premium pricing. You're paying more upfront, but getting quality dividend stability in return. In plain English, think of it like couch change. VXUS gives you bargain prices on international stocks, while VYM costs more upfront, but delivers quality you can count on. Now let's put this in perspective. VYM's 14% volatility over 5 years means you're getting steadier, calmer performance compared to most equity funds out there. So here's the scorecard. VYM crushes long-term with 79% returns and better risk management. VXUS leads short-term at 35%, offers global reach, and pays higher income. Two very different winners. Here's the thing, though. VXUS brings 16% volatility. International markets swing harder, meaning you'll feel bigger bumps both up and down daily. In plain English, think of volatility like a roller coaster ride. VYM's the family-friendly track with gentle curves, while VXUS takes you on the thriller with bigger drops and climbs. That's your risk difference. Now here's where it gets tricky. VYM crushed it with a 79% 5-year return, beating VXUS's 45% by a massive 34 percentage points. US dividends won decisively. But that's not the whole picture. VXUS crushed VYM with 35% versus 17% this year. International markets are finally outpacing US dividend stocks by double. In plain English, VYM's the marathon runner here. Steady, consistent pacing wins the long race. VXUS recently sprinted ahead, but it's been lagging behind for most of the journey. Consistency beats speed bursts. Here's what really matters. VYM's 16% drawdown beat VXUS' 29% crash and recovered in just 61 days versus 580. Now let's connect the dots. Nearly 2 years watching your money sit underwater, that's the psychological torture a 29% crash and 580-day recovery inflicts on investors. In plain English, VYM bounced back in just 2 months, like a quick bruise that fades fast. VXUS? That needed a year and a half to fully recover from its hit. Let's unpack this a bit. VXUS delivers a powerful combo, 3.1% yield today, plus 11% dividend growth over 3 years. Solid income that's actually growing. Here's the key takeaway. VYM offers stability with a 2.4% yield, plus reliable dividend growth of 3.7% over 3 years. Predictable income matters. In plain English, VXUS races down the runway with explosive growth potential, while VYM cruises at a predictable altitude. One's built for acceleration, the other for steady, reliable flight. But there's a catch. VXUS offers better portfolio protection with its 0.8 correlation. It'll zig more when US stocks zag compared to VYM's 0.9. Let's get into the weeds here. VYM's 0.9 correlation means when the S&P crashes, you're going down with it. Dividends don't change that fundamental reality. In plain English, think of it like weather patterns across your portfolio. VYM's your storm shelter right beside your US stocks, while VXUS built its own shelter in a completely different climate zone. But here's where it gets interesting. Both ETFs charge rock-bottom fees, VXUS at 0.05%, VYM at 0.06%. That 0.01% difference? Completely meaningless for your returns. Let's go zoom in on this. At 4% versus 6% turnover, both funds trade minimally. You're not losing sleep over trading costs with either one. In plain English, both funds cost pennies on the dollar. We're talking couch change here. The real question is whether you're okay paying 1 nickel instead of 2 for what you get. Here's where the story takes a turn. Over 8,500 holdings means you're protected from any single company disaster. True global diversification that shields your portfolio from catastrophic losses. Let's break this down further. VYM keeps it tight with just 569 holdings, handpicking the best dividend payers. Sometimes less really is more for performance. In plain English, think of it like planning a road trip. VXUS takes you through thousands of global destinations, while VYM's a focused tour of America's most reliable dividend-paying landmarks. Now for the real question, VXUS is nearly pure international at 97%, while VYM's barely leaving home with just 1.6% overseas exposure. Completely different worlds. Let's dig into the details. International stocks at 14.7 versus US dividend stocks at 16.4. That valuation discount could mean better returns ahead for VXUS. In plain English, think of VYM and VXUS as dance partners with very different styles. VYM sticks to the familiar American rhythm, while VXUS twirls across the global floor, exploring markets worldwide. So it comes down to what you need. VYM's steady, safer wealth building versus VXUS's global exposure and recent momentum. Here's where the story takes a turn. Your risk tolerance should drive this decision. VYM offers stability, while VXUS brings broader global diversification to your portfolio. In plain English, VYM's your steady, reliable partner. Predictable moves, no surprises. VXUS, that's the adventurous one, pulling you into exciting new territory. Different styles, different destinations on your investment road trip. Let's take a closer look. VYM's for steady US dividend growth over decades, while VXUS offers global diversification with higher income for patient investors. In plain English, VYM's the reliable domestic route you trust. Steady dividends from U.S. companies you know. VXUS? That's racing through unfamiliar international territory, chasing growth in markets you've never explored before. All right, the legal stuff. Do your homework, consult pros, and invest responsibly. Let's see how this plays out. That's a wrap. Hit subscribe if you want weekly ETF breakdowns that actually cut through the noise and help you invest smarter.